We became too used to and comfortable with India outperformance all the time, right? In 2000, and you have to go back and look at the last 3 years, and I think it would be true. But I thought it's just worth highlighting and pressing on what's happening globally as well, because globally it's a bull market. Markets which have not performed for 20, 25 years are coming back. And actually, maybe that is the reason why there is some demand for foreign capital elsewhere. It is no longer, we used to hear a year and a half back that word TINA. There is no alternative. But there are alternatives now. There's China, there is Europe which is starting to come back like the come back from the dead, basically, right? But let me just quickly put the numbers up. And it's the same thing that I put out in the morning, but I just wanted to look at this last point. I mean, this is all okay. When the crunching for, we know this, right? Last week was absolutely devastating. 2025 so far, again, big damage. But what this has done is that, the 10-year CAGR returns for both the mid and small cap indices have now fallen to 14 and 11%. This is around long-term averages of what equities give you. 12-13% is what they give you over long period, 25-year. You can go back and look at returns. And we are now coming back to kind of those levels. This is, of course, just indices. And also, I think this is now barely above the cost of equity. So, at an index level, now I'm not saying that, well, because this has happened and this is some magic signal that stocks will stop falling. That's not the point. But the thing is, all that excess froth, excess returns, if you want to call it, and many people will take issue with the fact of what is excess. There's nothing excess. It is what it is. But the point is, compared to the longer-term average, some of that has been actually, is gone now, and this is what the numbers look like. Now, just a couple of more points, and I said this in the morning as well. Impossible. Many people are still saying, well, maybe the bottom and is around the corner. It's impossible to call it. We'll only be wiser in hindsight. That's the nature of things. But one thing we know is that there is no real macro risk in India in that sense. That I think one has to be absolutely clear about. Foreign selling has been very large. These are not new numbers, but it's stabilized recently, right? I mean, FI selling has stabilized recently. Asia funds are underweight. Positioning sometimes is important. In the case of China, for example, it's worked in a big way. The huge underweights now starting to come back to market weight. They're underweight, whereas EM funds, which is the main source of money for India, are only modestly overweight now. And again, that excess positioning is all gone. And the last point is this global bull that I put up, right? So global markets are in a bull market. And this is not just the US. Actually, if anything, it is S&P 493, which is starting to fire up. Mag 7, those 7 stocks are starting to taper off a little bit. And these are returns year to date. This is the Hang Seng benchmark, the European 50 stock index benchmark, S&P, and this is, of course, the Nifty. And these are year-to-date numbers. And I mean, to that point, the Euro Stoxx 50, if somebody started working in Europe as an analyst in year 2000, for 25 years, that person has not seen, those levels come back up. And they're starting to come back now. I mean, it happened on Friday. So it kind of tells you that maybe there is a little bit of competition for capital, foreign capital as well, which is starting to emerge. But of course, earnings, etc., will have to pick up. Their earnings growth in Europe is 4.5%, 5%. So, that obviously can't sustain, but that's the situation right now.
Thank you for watching us on CNBC TV18. For all news and updates, subscribe to our YouTube channel and watch us on all social media platforms.